and welcome back to another episode of Bony's Life. If you're watching this on June 25th, 2025, then you're witnessing one of the most critical moments in Bitcoin's recent history. We're sitting at $107,190, and I'm about to break down exactly what happened in the last 24 hours, why the markets are moving the way they are, and most importantly, how you can position yourself for the next 24 hours of trading. Now, before we dive into the technical analysis that's going to make or break your portfolio, let me tell you something that might surprise you. While everyone's celebrating Bitcoin's recovery above $107,000, there's a hidden warning signal that 94.5% of Bitcoin holders are missing. And by the end of this video, you'll know exactly what it is and how to trade around it. But first, if you're new to the channel, I'm Bony, and I've been trading crypto for over 8 years. I've seen 3 major bull runs, survived 2 brutal bear markets, and I'm here to share the real strategies that work, not the hopium that gets you wrecked. So smash that subscribe button, hit the notification bell, and let's get into today's analysis. Let's start with what happened in the last 24 hours, because if you missed this, you missed everything. At approximately 1 a.m. Eastern Time, on Monday, President Trump announced something that sent shockwaves through every financial market on the planet. He declared a complete and total ceasefire between Israel and Iran. Now, you might be thinking, Bony, what does Middle Eastern geopolitics have to do with my Bitcoin bag? Well, everything. Here's what happened. Over the weekend, Bitcoin crashed from $103,000 to below $99,000 for the first time in over a month. Why? Because Trump announced that the U.S. military had conducted airstrikes on 3 Iranian nuclear sites, including a full payload of bombs dropped on the primary site at Fordo. The market went into full panic mode. Investors fled to safety, and Bitcoin, despite all the institutional adoption, still behaved like a risk asset. But then came Monday evening. Trump's ceasefire announcement triggered what analysts are calling a textbook V-shaped recovery. Bitcoin jumped 2% immediately, climbing from $104,000 to $106,000 within hours. The crypto market cap expanded by 3%, growing from $3.19 trillion to $3.27 trillion overnight. Ethereum surged 6%, XRP gained 5%, and Solana added 3%. This wasn't just a Bitcoin rally, this was a full-scale crypto market revival. David Simmer, CEO of Wave Digital Assets, perfectly captured what happened. We're seeing Bitcoin surge back to $105,000 and other major currencies like Ethereum, Solana, and XRP showing strong rallies of their own. This is largely due to easing tensions in the Middle East after the US brokered ceasefire. Now here's where it gets interesting for us traders. This geopolitical catalyst revealed something crucial about Bitcoin's current market structure. Despite all the talk about Bitcoin being digital gold and a safe haven, it still trades like a risk asset when real fear enters the market. But the speed of the recovery, that tells us institutional demand is absolutely massive right now. But the geopolitical drama was just the appetizer. The main course came yesterday when Fed Chair Jerome Powell testified before the House Financial Services Committee, and what he said is going to change the crypto landscape forever. Powell made the clearest statement we've ever heard from a Fed chair about crypto banking. Our view is that banks get to decide who their
Banks are
customers are.
free to
That's not our
provide banking
decision.
services to the
And
crypto
so
industry.
banks are free to provide banking services to the crypto industry, to crypto companies, and banks are also free to conduct crypto activities as long as they do so in a way that is protective of safety and soundness. This isn't just regulatory clarity. This is a green light for the entire traditional financial system to embrace crypto. The Fed formally removed reputational risk from its bank supervision framework on June 23rd. For years, this vague standard was used to deny banking services to crypto firms. Now it's gone. The FDIC and OCC made similar changes earlier this year, meaning all three major banking regulators are now aligned. What does this mean for Bitcoin's price? Jack Manley from JP Morgan Asset Management explained it perfectly. Bitcoin has become more legitimized as an asset class, in the sense that it's become a little bit more institutionalized. The regulatory framework is catching up to retail enthusiasm. Speaking of institutional demand, let me show you some numbers that will blow your mind. ProCap BTC LLC purchased 3,724 Bitcoin in a single day after announcing a $1 billion merger. Strategy, Metaplanet, and the blockchain group all added Bitcoin to their treasuries this week. But here's the kicker. Bitcoin ETFs recorded $588.55 million in inflows on Tuesday alone, marking an 11-day streak of gains. K33 Research published fascinating data showing that ETF flows have an R-squared correlation of 0.80 with Bitcoin returns, while corporate treasury purchases only show 0.18 correlation. Why? Because many treasury purchases happen through in-kind share exchanges with the existing holders, creating a net neutral market impact. But ETF flows, that's fresh money entering the market and it's driving prices higher. Now let's get into the technical analysis, because this is where we separate the profitable traders from the hopeful holders. Bitcoin is currently trading at $107,190, up 1.84% in the last 24 hours. But here's what the charts are really telling us. We're testing the upper bounds of a descending channel that's been containing price action for weeks. The key resistance zone is between $105,000 and $107,000, and we're right at the top of that range. The RSI is sitting at 71.163, which is approaching overbought territory but still showing bullish momentum. The MACD is flashing a strong buy signal at 561.9, and the ADX at 37.365 indicates strong trend strength. All major moving averages are showing buy signals, with the 50-day EMM providing support at $103,352. Here's what's really exciting from a pattern perspective. We're seeing the development of a potential cup and handle formation on the daily chart. This pattern, combined with the persistent golden cross where the 50-day moving average remains above the 200-day, supports a medium-term bullish outlook. But here's the critical level. For the next 24 hours, $107,000. If Bitcoin can decisively close above this level with strong volume, the path opens toward $112,000 to $114,000, which is territory we last saw near Bitcoin's all-time highs. For support, we have multiple levels. The immediate support is at $105,000, followed by the 50-day EMA at $103,352, then the psychological $100,000 level, and finally the $105,000 level, recent low at $98,200. If we break below $103,352, it could signal a deeper correction. Let's quickly look at Ethereum because it's setting up for something big. ETH is consolidating above $2,400, currently trading around $2,437. The support zone between $2,349 and $2,426 has shown strong buyer interest, and we're approaching a golden cross where the 50-day moving average is about to cross above the 200-day. Ethereum is also forming a cup and handle pattern, with the handle consolidating near the 200-day EMAA breakout above 2,750. Could validate this pattern and open the door to price targets between 3,000 and 4,100. There's also a Bollinger Band squeeze developing on the 4-hour chart, which typically signals that volatility is about to increase. Now, here's where we get to the fundamental analysis that most traders ignore, and it's going to shock you. According to CryptoQuant, Bitcoin's network activity index is approaching a 4-year low, falling below the 2,400 mark. This index measures active addresses, transaction counts, UTXOs, and average block size. Essentially, it shows how much the network is actually being used. Here's the paradox. Bitcoin's price is near all-time highs, but network activity is at 4-year lows. This divergence is significant because historically, the network activity index has tracked closely with Bitcoin's price movements. When network activity hits these levels, it often precedes either price rebounds or accumulation phases. But here's the real kicker, and this is the warning I mentioned at the beginning. According to Sentiment data, 94.5% of Bitcoin's circulating supply is currently in profit. Let me repeat that. 94.5% of all Bitcoin holders are sitting on unrealized gains right now. Ethereum is at 88.7% supply in profit, XRP at 65.1%, and Dogecoin at 64.7%. This level of profitability is extremely bullish in one sense, but it also creates a massive risk when these many holders are in profit. The potential for profit taking becomes enormous. Any negative catalyst could trigger a wave of selling as investors rush to realize their gains. Let me share what the top analysts are saying about this setup. Prominent crypto trader Kevin warned, indicators are flapping into bullish momentum, but without real money flow, it won't hold. We need fresh capital to fuel any sustainable breakout. He's watching for Bitcoin to break through both the 4-hour 200 simple moving average and the 106,800 level to confirm a bullish bias. Trader XO believes that if the geopolitical ceasefire holds, especially around Iran-Israel tensions, Bitcoin could push toward $110,000 again. But he also noted that Bitcoin remains stuck in a defined range with choppy reactive price action. So what's the trading strategy for the next 24 hours? Here's my game plan. And I want you to pay close attention because this could make or break your portfolio. First, the bullish scenario. If Bitcoin can break and hold above $107,000 with strong volume, I'm targeting $110,000 as the first resistance, with $112,000 to $114,000 as the ultimate target. The key is volume confirmation. Without significant buying volume, any breakout is likely to fail. For entry, I'm watching for a decisive 4-hour close above $107,000. If we get that with volume above the 20-period average, I'm going long with a stop loss at $105,000. The risk-reward ratio is excellent here with potential upside of 3 to 7% and downside risk of 2%. But here's the bearish scenario, and this is where most traders get caught. If Bitcoin fails to break $107,000 and starts showing weakness, I'm watching for a break below $105,000. That could trigger a move back to $103,352. And if that breaks, we could see $100,000 tested again. The concerning factor is that 94.5% supply and profit metric. If we get any negative catalyst, whether it's renewed geopolitical tensions, hawkish Fed comments, or just profit-taking fatigue, we could see a sharp correction. Remember, when everyone's in profit, everyone's a potential seller. Here's an interesting opportunity that most people are missing. While Bitcoin and Ethereum have most of their supply in profit, Cardano only has 46.5% of its supply in profit. This means more than half of ADA investors are currently at a loss. According to sentiment, this situation can signal potential undervaluation, especially if the network's fundamentals remain strong. The altcoin season index currently stands at 14, well below the threshold of 75 that would indicate an altcoin season. This suggests that capital is still flowing primarily into Bitcoin and Ethereum, but if we see a rotation, undervalued altcoins like Cardano could see significant moves. Let's talk about the macro environment because this is driving everything. Powell's testimony revealed that the Fed is still not in a rush to cut interest rates, although the door remains open if incoming data supports such a move. If Powell takes a dovish stance in future communications supported by favorable macroeconomic data, this could be bullish for risk assets like Bitcoin as lower rates prompt investors to seek higher yields. However, if the Fed maintains a hawkish stance, it could pressure Bitcoin and other risk assets. The key is watching for any shift in Fed policy that could impact liquidity conditions. The broader economic picture is also crucial. The ceasefire between Israel and Iran has reduced geopolitical risk premiums across all markets. Oil prices have fallen, which is generally positive for risk assets. But we need to watch for any escalation or breakdown in the ceasefire agreement. China's economic data has been mixed, and any significant weakness in the world's second-largest economy could impact global risk sentiment. European markets are dealing with their own challenges, including ongoing concerns about inflation and economic growth. Here's my specific 24-hour trading plan. In the next 4 to 8 hours, I'm watching for Bitcoin to either break above $107,000 with volume or show rejection at this level. If we get a breakout, I'm looking for a retest of the breakout level as support before entering long positions. If we see rejection at $107,000, I'm waiting for a pullback to $105,000, to $105,500 for potential long entries, with stops below $104,000. The key is patience and waiting for clear signals rather than chasing price action. For Ethereum, I'm watching the 2,470 level, which is the 200-day EMA. A break above this level could trigger the next leg higher toward 2,750. If ETH can break 2,750, the cup and handle pattern targets come into play. Risk management is absolutely critical in this environment. With 94.5% of Bitcoin supply in profit, we could see sudden volatility. I'm keeping position sizes smaller than usual and using tighter stops. The market can turn on a dime when this many people are sitting on profits. I'm also diversifying across different time frames. Some positions are for the next 24 hours, others for the next week. This helps manage the risk of being wrong on timing while still capturing the overall trend. Looking beyond the next 24 hours, the institutional adoption story is just getting started. The Fed's clarification on crypto banking is going to unleash a wave of traditional financial institutions entering the space. We're already seeing it with the ETF flows and corporate treasury purchases. The regulatory clarity we're getting is unprecedented. For the first time, banks have clear guidance that they can serve crypto companies without regulatory backlash. This is going to accelerate institutional adoption and could drive the next major leg higher in Bitcoin's price. Current market sentiment is cautiously optimistic. The fear and greed index is in the greed territory but not at extreme levels. Social media sentiment has improved significantly since the ceasefire announcement. but we're not seeing the euphoric levels that typically mark market tops. The options market is showing increased call buying, particularly for strikes above $110,000. This suggests that institutional investors are positioning for higher prices in the coming weeks. Let me summarize the key technical triggers for the next 24 hours. For the bullish case, we need a 4-hour close above $107,000 with volume above the 20-period average. This would target $110,000 initially, with $112,000 to $114,000 as the ultimate objective. For the bearish case, a break below $105,000 would target $103,352, and a break off that level could see $100,000 tested. The key support levels to watch are $105,000, $103,352, and $100,000. Volume is crucial in both scenarios. Without volume confirmation, any breakout or breakdown is likely to fail. I'm also watching for any divergences between price and momentum indicators, which could signal potential reversals. Here's my final take on the next 24 hours. Bitcoin is at a critical juncture. The geopolitical catalyst has provided short-term relief, and the Fed's crypto-friendly stance is providing long-term support. But the technical setup is mixed, with bullish momentum fighting against overbought conditions and profit-taking risks. The smart play is to wait for clear signals rather than trying to predict the direction. If we get a volume-confirmed breakout above $107,000, the upside potential is significant. If we get rejection and weakness, there will be better buying opportunities at lower levels. Remember, trading is about probabilities, not certainties. The market can surprise us in both directions, so always use proper risk management and never risk more than you can afford to lose. That's a wrap on today's analysis, crypto warriors. If this breakdown helped you understand the current market dynamics and gave you a clear trading plan for the next 24 hours, smash that like button and subscribe for more daily crypto analysis. Drop a comment below with your thoughts on Bitcoin's next move, and don't forget to hit the notification bell so you never miss an update. Remember, the crypto market never sleeps, and neither do we. I'll be monitoring these levels closely and will update you on any significant developments. Until next time, this is Bony. And remember, in crypto, fortune favors the prepared mind. Stay safe, trade smart, and I'll see you in the next one.